Hi, I'm Sibu John from Intellect Design Arena. Welcome to the launch of our CBX Escrow solution for the US market. I'd like to introduce to you David Revell, who's an experienced senior executive with 35 years of experience across financial services, telecommunications, and information technology. Dave was until recently EVP and Global CIO for CIBC Bank. Prior to that, Dave has held senior management positions at BMO Financial Group, Rogers Communications, and IBM Canada. We are also joined by Balakrishnan Narasimhan, who we refer to as Bala. Bala is Intellect iGTB's Head of Solution Consulting for the Americas, having over 27 years of experience as a banker, as an enterprise banking solutions architect, and also as a management consultant at Deloitte, USA. Bala has led product strategy, delivery, and large-scale transformations for banking clients globally before moving to the US in 2007. And now for the topic of the day. Following the successful launch and implementation in the Asia Pacific, Australia, and other markets, Intellect is now launching the CBX Escrow Deposit solution in the United States. This will help banks strengthen their deposit base and enhance their cash management offerings. So let's hear more about this exciting launch from Dave and Bala. Dave, over to you.
Well, thanks for that nice intro, John. Hi, Bala, and thanks for joining me today on this exciting announcement by Intellect. I'm quite familiar with escrow deposits as an area of interest in the US, and I'm really curious about what Intellect is bringing to the market to address this key demand. So tell us more about this launch. Why escrow deposits, and why now? Is there some new relevance in the current market context? What are the bank needs and client segments that you're targeting, and why is this new for the US market?
Sure. Thanks, John, for that great intro. Hey, Dave, it's always a pleasure to talk to you. As you know, Dave, there's an ongoing race across banks in the US to increase both their asset size and deposit base. You can actually see this trend in the number of mergers being announced, and COVID is also, in a subtle way driving this. While studying this pattern, we at Intellect saw a very finite trend of banks using escrow deposit as one of the key levers to increase the deposit base. So we knew that the desire was there and the timing was just right. Our analysis also showed that the options in the market for new and modern solutions in this space was very limited. Banks actually had two options. One, continue with legacy solutions that had either minimal or no plan for a roadmap, or two, core banking applications which added incremental modules to handle escrows. These options were very generic and typically not use case specific. What it means is that there was absolutely no difference between, for example, say a landlord using this application for a rental security deposit escrow as compared to a lawyer who was using this for attorney trust accounts. We identified this as a key opportunity early on. We had already seen success in other markets in this space, and the US was clearly our next big focus market for this highly specialized domain. You asked about target client segments, Dave, and that's a very good question. Now take, for example, a landlord, or in other words, a small business owning just about 4 to 5 apartments and have to manage escrows for security deposits, for pet fees, for first month rent, last month of rent. On the other hand, you could have a end of the spectrum where you have a large corporate who handles a multi-million-dollar escrow for something like M&A holdback or project financing, litigations, etc. So you can clearly see why this is client segment agnostic and definitely a big opportunity for us.
That sounds like a very broad variety of bank and client segment needs to solve for. Any solution addressing this is going to need to be extremely comprehensive and robust. So tell me a little bit about Intellect iGTB's solution. What makes you different from other products out there? What makes you the best choice for banks in the US?
Sure, Dave. So Dave, what we've done here is that we have packaged the solution into two key components. One, the product management framework, for the bank. And the second is the front-end digital self-service experience for the customers of the bank. The strength of the product management framework is that the bank can use a parameter definition framework to manage and launch different types of escrow deposit products. Now, keep in mind that this also includes the ability to define and manage US compliance rules. For example, a bank may want to define transaction rules and limits based on Retd, or they want to define tax withholding rules or estimate policies. Dave, as you already know, these rules sometimes apply at a federal level. They also may apply at a state level, county level, etc. And all of this in the framework that I spoke about is managed through parameters that are defined by the bank. So what this means is that if there is a change to a regulation in the future or change to the product attribute in the future, the bank will not have to depend on us to make the changes. They can just modify the parameter on the system and they would be all set. Now coming to the second component, our digital experience for the bank customers, we call it contextual banking experience, or CBX in short. CBX provides a fully API-enabled, state-of-the-art, persona-aware, segment-aware, and a highly contextual user experience that is tailored for escrow deposits in a way that has never been seen before in the domain. Now the word contextual here is a key differentiator. It's a big paradigm shift for us. So going back to the examples I took up earlier, if there's a landlord who's using this for security deposit escrows, that person would have an entirely different and a tailored experience as compared to a lawyer who uses it for IOLTers or attorney trust accounts. So for example, the type of details shown on the screen, the labels, the hierarchies, in the case of a landlord, it could be a landlord-tenant kind of a structure, but if a lawyer may follow a lawsuit and a client kind of a structure. And all of these are highly contextualized to the different types of escrow use cases for us.
Thank you, Bala. You've covered both the bank and the customer end of the solution aspects very well. However, I know from my prior experience, every bank is different and unique, and a one-size-fits-all model doesn't always work. Does your solution offer options to customize bank-specific needs? And since you did earlier mention U.S. regulatory compliance, how are you addressing compliance in the long run?
Well, Dave, you're actually absolutely right when you say that a one-size-fits-all model will not work all the time. So we were very clear, Dave, from day one that our product should be highly configurable by the bank on their own with minimal to no dependency on us. This applies to areas like creating a product, defining interest rules, splitting requirements, managing alerts, notifications, labels and fields for every escrow use case, workflows, reporting, and many such areas like that. Now, having said that, it is absolutely true that while the baseline solution may be common, every institution is different and will have specific needs that are unique to them. So when we come across such needs, our first attempt is to see how we can generalize these requirements and merge them into the mainstream product release. But if that is not an option, or if it is critical for the bank for a very quick delivery, we can always customize it and meet unique requirements as required. Now coming to the question that you had on US compliance, that's always been our top priority when we decided to bring this product to the US. We actually built a complete US compliance program and engaged some of the best experts to advise us. Now, I want to be clear, I'm not talking about someone who comes in and does a one-time exercise of analyzing some citation and just handing us a report. In our case, our compliance consultants actually get into the weeds of every applicable regulation. They look at the way in which it should be parameterized while addressing, the federal and state level rules that I talked about earlier. Things like how should the accounting work? How should reporting requirements be handled? 1099, 1042, etc. FDIC requirements. On top of all of that, we made sure that this was not a one-time exercise. It was an ongoing program, which means that when there are new regulations coming up or if existing regulations are modified, in addition to the parameterization I talked about, we would be on top of that to react to something that may require a product enhancement if required.
The U.S. regulatory compliance program sounds really interesting and a great long-term plan. As a long-term banker myself, I can see why this provides a lot of assurance to your clients. So Bala, I'm going to switch gears a little bit now and I'm going to put on my old CIO hat. So what are the options that you're offering for deployment of this solution? On-prem or cloud-hosted? How long does it take for a typical mid-sized US bank to actually go live with this solution? And what are the typical ecosystem integration touchpoints that you're targeting for this space?
So asked like a true CIO, Dave. So yes, we are quite flexible with the deployment, Dave. So we offer both an on-prem solution and a cloud-hosted model. In the case of the latter, we are actually agnostic of the providers. We have partnership established with all the big names in the market for cloud services. Now, in terms of a typical implementation, at a typical mid-sized US bank, it can run from anywhere between 4 to 6 months on an average. The foundation platform remains the same, but the timelines can sometimes vary based on the nature of the escrow product or to address some bank-specific experience needs on a digital perspective and also the integration. And you did ask about integration as well. So in terms of our standard touch points that we maintain, our highest priority has been to establish connections with standard core banking applications so that the bank account relationship in the master and sub account hierarchy is maintained. The second area, we are also focused on integration to payment systems. This is from the point of view of managing all the money flows for different type of payment rails like ACH, wires, checks, etc. There are a variety of models available here. It's a very lightweight model to a highly deep ingrained integration with such payment applications. And this approach typically varies across banks depending on what they have currently in their ecosystem. But the good thing here, Dave, is that we have built this in such a way that we are actually agnostic of payment rails, which means that if the bank wants to add or modify anything in their payments infrastructure in the future, it will not significantly impact the escrow system. And our solution would be agnostic of the actual payment rail processing.
So that's really interesting, Bala. You're saying that you can be entirely independent of the payment processing systems and just focus on escrow as a specialized area.
Exactly. Yeah.
So continuing on with my CIO hat, I'm now actually keen to know, have you already sold or started implementing this solution in the US? And can you give any idea on the active opportunities that you're working on? And also with my CIO hat, how do you compare with the rest of the market in terms of pricing?
Great question, David. It's always down to the money, right? Anyway, so going to your first question, we are actually working with some of the large tier 1 banks in the US. A few of them are either starting the implementation with us right now or in the process of contracting. We are also working with several US regional banks, and some of them are making their final decisions in the coming months. Now, for obvious reasons, I cannot name these banks, but we hope to make formal public announcements very soon. In addition to this, Dave, we also have a plan to go out to the mid-sized bank segment, where we will actually have more of a standardized and a model bank-like variant of the solution with a much shorter implementation cycle. Coming to your key question on pricing in the market, so we believe that we're very uniquely positioned in the US by offering not just a robust product definition framework, but a very distinctive and a highly contextual user experience. There is no one that we know of in the US offering this distinction. This fact has been clearly demonstrated in a recent experience in the market where banks have actually chosen us over existing solutions, both in terms of our solution strength and also from a pricing standpoint, our lower TCO over a 5-year term.
Sounds really good, Bala. I wish you and your team good luck with those banks you're talking to.
Thank you.
So how do you see these offerings playing out in the larger transaction banking space? The banks you're speaking to, are they looking to go beyond escrow as well?
Oh, absolutely, yes. In almost all of the conversations that we're having with banks in the US on escrow deposits, their long-term plans actually include multiple progressive evolution strategies. The immediate and the most obvious extension is virtual accounts. Now, given the fact that the same foundational layer is used for escrow deposits, can also cater to a huge variety of virtual account-related use cases like managing corporate virtual cash, OBO as we call it, or on behalf of payments and collections, liquidity management alternatives, in-house banking, multi-currency accounts, whole lot of things. Banks are actually planning to look at virtual accounts as a second phase initiative to extend on top of escrow deposits. In addition to that, we're also looking at banks who want to transform their liquidity management to a more sophisticated solution. So you may know that Intellect iGTB's liquidity management solution is actually responsible currently for processing more than 23% of the global MNC suite, providing a wide variety of functional features that includes, sweeps, we've got cash concentration, intercompany lending, investment fees, cash flow forecasting, etc. So, in all, very exciting journey for us out here, Dave, and we're really looking forward to it.
Agree, Bala. And it makes absolutely perfect sense to me why banks will want to take a progressive approach to modernizing their transaction banking ecosystem. So what are we going to hear next from you, and what's an extension of your escrow deposits offering?
Well, Dave, in terms of the immediate short term, we are actually commencing a couple of our implementations this summer, covering a very specific set of use cases for escrow deposits so as to help these banks with the initial MVP, while we continue to contract and finalize with the other banks that I talked about earlier. Now, in parallel to this, we are also working on a broader expansion of the solution scope. Some examples of the areas we're looking at include areas like government escrows, like surrogate accounts, state-level funding, county-level funding accounts, etc. More extensions to property management, which is a big space that a lot of banks are focused on right now. Complex business escrows like mergers and acquisitions, performance guarantees, project finance, and litigations, and many more. While doing all of this, Dave, as I mentioned earlier, our key philosophy continues to remain as a higher priority as a product company is to ensure that we fully address US regulatory compliance on a continued basis for all of these types of escrows. So all in all, in summary, Dave, we are very clear in our vision that we want to become the new breed of solution in the US for escrow deposits. And we want to bring about a complete paradigm shift for this area, the space, which we think is very, very exciting for us.
That's extremely insightful, Bala, and I really appreciate the level of details you provided in this conversation. This gives me much better visibility into Intellect's really exciting product launch for US Escrow Deposits. I'm very excited to see progress in the coming months, and once again, I wish you and the team the very best with your product launch and your upcoming implementations.
Thank you.
So what do you think, John?
Absolutely agree with you, Dave. These are extremely exciting times for us at Intellect. It gives us an opportunity to break into the market with a key demand area for banks in the US, while also drawing best practices from our global footprint of over 250 clients in 90 plus countries, including the US. I really appreciate your time, Dave and Bala, for this very open and extremely helpful conversation. For any banks out there who are looking to transform their escrow deposits business in particular, or transaction banking in general, feel free to reach out to us or visit our website, igtb.com. Thank you and have a great day.